Eddie Ghabour of Key Advisors Group is with me. So Eddie, we're going to talk about what could be waiting on the other end. But first, we're looking at another day of potential records heading into the holiday season. What's driving that sentiment right now?
You know, one of the biggest things I think is when you look back over the last several months, there's been a lot of headlines about recession and earnings are going to be dismal, consumer spendings is going to go down, and all these numbers have surprised to the upside. So I think the market was pricing in and people were pricing in a worst case scenario. And as we've seen consumer sentiment, consumer numbers and earnings, it's actually been a pleasant surprise to the upside. And the market is finally focusing on fundamentals and ignoring some of the noise that we're seeing on a day-to-day basis, which is, as an investor, what you want is a fundamentally based market. And right now, that's what you're seeing is we have surprise to the upside on all these factors, and the market is paying dividends right now for investors that have hung on during this volatile market and rewarding them to the upside. Now, look, with that being said, I do think when you've had a big year like this, it is prudent to, as bullish as I have been, is to take some profits in this environment because, as we know, it's not going to go straight up. And when you look at a year like this, up possibly 25%, it's always prudent to take a little bit of profits and rebalance your portfolio.
So the fear is, of course, that we could see a repeat of where we were last year. Certainly, things were looking really good going into December, and then we saw the big sell-off. Is the real risk right now all about the trade issue, that the market has basically priced in the fact that some kind of deal is going to happen? You know, where is that downside? Is it no deal? Is it the December 15th tariffs? What should investors be looking at?
The December 15th tariffs, frankly, have the most risk to the market. The market's gotten used to us coming real close to signing some type of trade agreement and then it getting pushed off. The market can handle that, frankly. What it can't handle is, in the short-term basis, are tariffs going back on December 15th and seeing the rhetoric escalate to more negative. And if we see that, I think you will see a downdraft in December. I believe for the investor with the right risk tolerance, if they have rebalanced and taken profits during these up markets, is that would probably be a good opportunity for them to get back in. Because keep in mind, a lot of investors have not participated in this upside because of the amount of money that's gone to bonds and has gone to cash and not followed this market. This has been the most hated bull market in history.
So Eddie, when you say it's time to take profit, I mean, how do you time that? I know you can't time the markets per se, but is now the time to do that? Maybe over the holiday, assess your portfolio before we get any kind of resolution, any kind of headline on the latest trade issue?
So you're right, you can't time it. And look, everyone's situation's on a case-by-case basis, but we've always been big believers, as you see the equity markets go up and hitting new highs, is gradually taking profits as it continues to go up, because you're not going to time it exactly. And if you try to get greedy and wait and try to squeeze out the last 3 or 4%, you may be disappointed to the downside. So know your risk tolerance, get back to what your original allocation should be, and take advantage of a gift that no one probably thought we were going to get this year. Again, as bullish as I was coming into this year, I personally did not think we'd be looking at a 25% up year on the S&P. So I certainly want to take advantage of it.
Eddie Ghabour, some good takeaways there. Thank you so much for joining us today.
Thank you for having me. Have a great Thanksgiving.